Hi everyone and welcome back to today's morning report on Tuesday the 14th of April with me, Richard Berry, market analyst at Antic Markets, looking at Eurodollar. And we've had this sort of choppy move on Eurodollar in the last couple of days. We saw the strong move to the downside with that bearish engulfing candle last Thursday, again confirmed by Friday's bear candle, then a reaction higher yesterday. So I think this is sort of playing into this fairly choppy, uncertain move that we've got on the dollar in front of the Fed. Now the euro's reacted lower as the dollar has started to strengthen today. Again, you've got pretty much across the board dollar strength apart from against the yen, and we're now seeing the euro, as I said, just dropping back. Initially it was sort of fairly mixed going into the European session. It's now got a little bit of direction to the downside again, and you can see these momentum indicators fairly neutral really. RSI at 48, just prior to the European session it was around 50. MACD line's basically flat, and also stochastics are falling away, so there is a bearish bias on the technicals, but certainly I think in front of the Fed the market is going to be a bit uncertain, and it has fallen away, but whether it holds on to the support 1230 was the reaction low that we saw yesterday. That survived an initial sort of retest of that yesterday afternoon. We're seeing another move back towards that. You're only sort of 15-20 ticks away from it now. It'll be very interesting to see if this support holds initially. That sort of protects the key sort of near-term pivot around 12.15, which was the reaction lows that we saw from late April, and then subsequently highs that we saw in the middle of May, late May. So that is your pivot, I think. And if you lose that pivot, then you're looking back at sort of 111 figure again. So that is an important near-term level, 12.15, to watch out for. But that certainly the technicals have got a mildly sort of corrective bias, but again it's nothing too significant with the RSI and the MACD line is basically neutral. So it'll be interesting to see how this one plays out, because we have got the Fed tomorrow. The market will become increasingly aware of that, increasingly cautious I think with this. So despite the fact that we've just fallen away again today, that support that we've got now between 12.15 and obviously yesterday's low 12.30, I think that's likely to hold actually going into the Fed. But it'll be interesting to see how this one plays out. But I wish you good luck in your trading, because you've got the resistance that comes in now at around 13 figure, which was yesterday's high, and that sort of again protects sort of another pivot around sort of 1330, 1320, which was a few reaction highs that we've seen in the last couple of days. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.